Welcome to the deep dive. We're going to be digging into some pretty significant global economic shifts. If everyone's talking about these newly imposed U.S. tariffs on emerging economies, what's got a lot of folks kind of scratching their heads is that, these tariffs are being called the highest in 100 years.
Yeah, it's not just like numbers on a spreadsheet. This is really a story about how interconnected like the whole world is and
Correct.
how one country, makes a policy change and it can really have ripple effects across, all these different continents. It's a big deal for sure.
Absolutely. And, for our listeners who really want to get up to speed on this quickly and thoroughly, this deep dive is going to, try to cut through all the noise. Our mission today is to really try to figure out what are the immediate concerns and the long-term consequences of these tariffs. We really want to focus on emerging markets, particularly in Asia.
Yeah. And we're going to be pulling a lot of our information from this Reuters report from April 3rd, 2025, which details, a lot of these initial reactions and anxieties.
Perfect. Well, let's just jump right in. Let's look at those immediate reactions. This report from Reuters paints a picture of some really quick and significant market movements. Currencies in emerging economies are taking a hit. What does that actually look like in practice?
Well, we saw the Vietnamese dong hitting a record low, and the Thai baht also took a pretty significant dip. So this rapid currency depreciation across Asia, it signals a real loss of confidence from investors, and that can set off a chain reaction, right? Import costs go up, inflation rises, and that can stifle growth.
So it's not just about the exchange rate you see on your computer. This has really real-world implications for businesses and just, everyday people living in those countries. It sounds like it's not just currencies that are feeling the heat, though, right?
Yeah.
We're also seeing concerns about, the financial stability of these countries themselves.
Exactly. The ICC, the International Chamber of Commerce, came out and said they're worried about a potential cascade of sovereign rating downgrades.
That sounds pretty serious. Are there any historical precedents for this type of, widespread cascade? Have we seen similar tariff actions lead to this type of systemic downgrades in the past?
Well, that's a good question. I don't have the exact historical data in front of me, but the concern is definitely real. A lower credit rating basically means it's going to be way more expensive for a country to borrow money, on the global market. And that could seriously limit their ability to invest in important things like development projects or even just manage the debt they already have. It's a slippery slope.
It sounds like it.
Yeah.
And, the stock markets are not immune to this either, right?
No, absolutely not. The report specifically points out that Vietnam's stock market just took a nosedive, almost 7%. And they said that was the steepest decline in at least 4 years. That's a huge drop. And it really shows you how quickly things can change. Investors get spooked, they pull their money out, and it just creates this downward spiral. And even sovereign debt is feeling the pinch.
So even the debt that these governments have issued.
Right. Sri Lanka's sovereign dollar bonds, for instance, those dropped to their lowest level since they had to, restructure their debt last year. What's really striking here is just how quickly market sentiment can shift, right? As soon as these policies are announced, bam, confidence evaporates, and it just highlights how interconnected everything really is.
Yeah, it really does. And it looks like, the experts are taking this seriously. JP Morgan actually went ahead and downgraded emerging market currencies. They're calling this an enduring shock to sentiment. They're even saying it could be a turning point for emerging market debt. That's a pretty stark assessment.
It is. JP Morgan is basically saying they don't see this as a temporary blip, They think this is a fundamental shift, and investors need to rethink the risks associated with these emerging markets. And this kind of ties into a bigger narrative we've been seeing where, a lot of these emerging economies were hoping to attract more investment, right?
Yeah.
To keep growing. But these tariffs could really throw a wrench in those plans.
So drilling down a little bit, the report really highlights how factory Asia is being hit the hardest. Can you kind of explain why that region is facing the brunt of this?
Yeah, so a lot of the Asian economies, particularly in Southeast Asia, they built their growth models on, manufacturing and exporting goods. They're key players in the global supply chain. They make stuff that gets shipped all over the world, including, of course, to the U.S. And the report, it points out that 6 out of 9 Southeast Asian countries are facing tariffs between, get this, 32 and 49%.
Wow. Those are some big numbers. And it seems like the data really backs that up. Citi did an analysis, and they found that while the average U.S. tariffs increase is around 21%, Southeast Asia and China are getting slammed with a 34% increase. That's compared to, like, a more modest 20% for Europe. And the impact on Latin America was pretty small.
Exactly. And this really highlights the vulnerability of these export-driven economies. One portfolio manager from Allspring Global Investments put it really well. He said these tariffs raise serious questions about the viability of that traditional, structural export-oriented growth story for emerging markets. Basically, if their access to the U.S. market gets cut off, they're going to have to completely rethink their whole economic game plan.
Do you think we could get into some specifics about which countries and products are facing these really high tariffs? The report had some pretty eye-opening examples.
Yeah, for sure. Well, for starters, Madagascar's vanilla is facing a 47% tariff. That's almost half. And Sri Lanka's textiles are getting hit with 44%. And it's important to remember that for some of these, poorer nations, the impact could be absolutely devastating. Cambodia, for instance, over 40% of their exports went to the U.S. in 2022. And now they're looking at a 49% reciprocal tariff. That's a tariff imposed in response to the ones the U.S. put in place. And Bangladesh is in a similar boat, facing a 37% reciprocal tariff.
Those numbers are really staggering, especially when you think about how much these countries rely on exporting to the U.S. It is interesting, though, to see the contrast with other regions.
Yeah. Latin America and a lot of African nations, they're not facing these super high tariffs. Kenya, for example, they only have a 10% tariff on textiles. And they actually see this as a potential advantage over countries like, Vietnam and Sri Lanka, who are now dealing with these much higher barriers to trade. So it's really interesting, right? These tariffs could end up completely reshaping global trade flows. We might see some winners and losers emerging in places we didn't expect.
It's definitely a complex situation.
Yeah.
So looking beyond all of the immediate market chaos, what are some of the potential long-term consequences that economists are really worried about?
Well, as JP Morgan pointed out, one of the biggest concerns is that this could be a negative turning point for emerging market debt. A lot of these countries were hoping to attract more investment, improve their creditworthiness, build for the future. But these tariffs throw a major curveball into all of that. Goldman Sachs, for instance, they're predicting that China's GDP growth could be dragged down by a whole percentage point. And considering China's role in the global economy, that could have a ripple effect on emerging markets across the board.
Wow. The report even drew a comparison to the 1970s energy crisis, which sounds pretty alarming.
Yeah, it is a serious comparison. John Denton from the ICC, he actually said that the potential impact of these tariffs could be similar to what we saw during the energy crisis back in the 70s. And that was a time of massive global economic upheaval. We saw stagflation, instability. Developing nations that relied on energy imports were hit especially hard. So the concern is that we could be on the brink of another one of those massive systemic shocks. It's not just about the countries directly affected by the tariffs. It could have far-reaching consequences for everyone.
It really sounds like this is not just a small adjustment, it's potentially a huge shift in the whole global trade landscape.
Absolutely. A portfolio manager from William Blair put it this way: "We haven't seen these large gravitational shifts in 80 years. It's like watching the tectonic plates of the global economy start to move. It makes you wonder what the world trade map is going to look like in 5, 10 years down the line."
That's a good question. What about potential policy responses? Are there any actions that these affected countries might take?
Well, HSBC is saying that they expect to see central banks in Asia, like in China, Taiwan, Malaysia, possibly stepping in with rate cuts. The idea is to prioritize growth, even if it means potentially dealing with higher inflation because of these external shocks. So they're basically trying to make borrowing cheaper, stimulate domestic demand. It's a tough balancing act for these central banks, though.
It makes sense, but the IMF managing director also came out and said that a lot of these countries don't have much room to maneuver, right?
Yeah. Kristalina Georgieva, she warned that a lot of countries have kind of used up all their options in terms of fiscal and monetary policy. They spend a lot, they took on a lot of debt during the COVID pandemic, so now they don't have as many tools available to cushion the blow from these tariffs or from any other economic shocks that might be coming down the pipeline.
So it's kind of a perfect storm situation in a way.
In a way, yeah.
So just to kind of sum things up, it looks like emerging economies, especially in Asia, are facing some really strong economic headwinds because of these new U.S. tariffs. We're seeing worries about currencies losing value, credit ratings getting downgraded, and even concerns about long-term growth prospects. And this isn't just some minor trade spat. This is potentially a huge shift in global trade with a lot of uncertainty about what the future holds.
That's a great summary. A lot of people were caught off guard by how quickly and drastically these tariffs were imposed, and it's likely that we're going to be feeling the effects of this for quite a while.
And that brings us to our final thought for our listeners. We've talked a lot about the impact on these emerging markets, but considering how interconnected the global economy is, how do you think these tariffs might eventually affect more developed economies, even everyday consumers in those countries? What are some potential unintended consequences that maybe we haven't even thought of yet? It's definitely something to keep in mind as this whole global economic situation continues to unfold. Thanks for joining us for this deep dive.
Of course. It was a pleasure. Thanks for having me.